Over a century ago, in the heart of Kansas City, Missouri, three brothers started their journey to acquire a theater and place the foundation stones of AMC theaters. Fast forward to 2013, a milestone in this company's journey, when they first made their debut on the New York Stock Exchange under the ticker symbol AMC. But as the years rolled by, the stock went on a roller coaster ride. From its heights in March 2015 to its depths in January 2021, the stock lost almost 94% of its value. However, in the early months of 2021, things were about to change for AMC. The stock, which was once trading at a modest $9 a share, soared to $230 a share in mere 6 months. This rise translated to an incredible 25-fold return on investment and shocked the world. AMC emerged as one of the best stocks of the year by clocking in gains of over 1,000% in 2021. But today we see an unexpected twist where AMC stock finds itself once again in the familiar territory of $9 a share. Billions of dollars of wealth evaporated as if the roller coaster ride never happened. Now the question is, what triggered this rise and then the sudden nosedive of AMC stock? Before all this commotion, AMC was just another stock which was overlooked and overshadowed. Sure, people enjoyed their cinema nights, but investors didn't pay AMC much attention, and it made sense as the stock for the better part of the decade was consistently losing value. However, when Wall Street notices a stock continuously falling, it becomes an opportunity for them to cash in by shorting the stock. Shorting is essentially making a bet that the stock is on a one-way journey to nothing, and it is polar opposite of the typical stock purchase where you're crossing your fingers that the stock goes up in value. So the relentless bets against this stock by Wall Street put immense pressure on the stock and made it look like the fate of this stock was decided. But just as COVID hit America, and this bet looked more sure than anything, a series of events created the perfect storm for Wall Street. Firstly, the irresistible profits of shorting this stock meant that Wall Street shorted about 20% of all AMC shares, which showed a huge lack of confidence in this company. But this increasing short interest didn't go unnoticed. It caught the eye of investors who wanted to stand against the giant Wall Street firms. Through Reddit groups and social media memes, they were able to take a stand for a couple of companies whose stocks were doomed by Wall Street. Chaos started on Wall Street when these individual investors started buying huge numbers of shares of AMC stock. So when an army of individual investors decided to pool their money and focus on one stock, the demand of AMC stock began to surge, and with it, the price skyrocketed. Initially, the price change was gradual, as it is very hard to coordinate such a flow of money. But things picked up when it gained more popularity on social media as well as mainstream media, and slowly, enough people invested in the stock to change its trajectory. The ramping price then started a massive short squeeze on the stock. Short squeeze was the worst nightmare for every investor and firm on Wall Street who was betting against AMC. The increase in price meant they started to lose billions, and in order to cut their losses, a lot of firms started to buy the stock, which threw gas on fire and made the stock go up even quicker. As a result, within a matter of months, AMC stock increased by over 2,100%, making Wall Street bleed by billions and giving a small win to the individual investors. While some companies who were going through this same scenario managed to retain some of the growth in their stock value, that unfortunately wasn't the case for AMC. The stock dropped quickly, but AMC was able to raise over $230 million by issuing 8.5 million new shares in 2021 to pump some cash in the business. But the theaters who are their bread and butter never fully recovered from COVID. They tried making exclusives with stars like Taylor Swift, which could potentially bring in about $1 billion for the company, but it still remained insignificant compared to their debt of nearly $10 billion. AMC's last lifeline to tackle this debt is to issue more shares like they did in 2021. And recently, they announced their plan to issue a whopping 40 million shares to boost their cash reserves. However, in the current climate, with not as much support from the individual investors, not being able to fully recover from COVID and facing a very competitive industry with various streaming giants, this news came as a shock to the investors. A shock which dropped the stock by 37%, dragging it back to the $9 mark. So looking at the last couple of years, the rise of the stock and the downfall to its previous lows, and the aftermath with the company facing even bigger issues. Unfortunately, I think we are witnessing the last days of a century-old business who has failed to adapt to the changing world. Comment below, what do you think about AMC stock's journey? Please like and subscribe, and thanks for watching.